If the U.S. goes to war with Russia, is that a good time to buy the dollar, or is it a good time to buy gold?
Gold. That's not a real long answer. I included that in one of my last presentations when I was speaking at the Silver Summit, and I showed how NATO has been encroaching on Russia and how they've always had this mindset of feeling threatened. And, this is one reason that you don't want to see gold go to the moon because of World War III. But if that happens, it will, and it's better to be on the right side of things financially than on the wrong side, because you can't really control the politics of this planet.
Mm-hmm. Now, Mike, you've made some spectacular videos, travel videos. You were in Egypt, you're by the pyramids, you're in Cairo. And of course, these countries are now in huge turmoil. It's probably not even possible to make a film like that at this time, given the political circumstances. But when we talk about the dollar, when we talk about gold, it's usually connected to the dollar. What we miss a lot of times is that in other currencies, gold is making new all-time highs. Like, for example, in Venezuela, it's doing quite well, the South African rand. So it is doing what it should be doing in these other economies.
Yeah, it's interesting. When you measure gold against most currencies on the planet, it's making record highs. It's just that the dollar is the majority of currency on the planet, and it's not making record highs there, but it's still doing fairly well. The vast majority of my portfolio is precious metals. I'm heavily into silver. And, I'm a dealer, but my personal finances are completely separate from my business. In my personal finances, I'm basically short the dollar by owning gold, and I'm long global turmoil.
So is the Russian central bank. A lot of people always want us to come up with some bad news about the Russian economy. Of course, it was well covered when the ruble was crashing, and everybody in the West, we're at this geopolitical sort of point of World War III emerging, and people want to hear bad news. But the central bank there has been doing every single step of the way. Elvira, who runs the central bank there, has been buying gold, let the ruble float. The ruble crashed. She stayed strong while all the banks and corporations in Russia were saying, oh my God, do something, help us. She stayed firm, let the ruble float. What do you think about the fact that Russia keeps on buying tons of gold every single month methodically? Are they more prepared for World War III than the rest of us?
Well, basically, I think Russia and China have been very smart, and we have been really stupid in the West. The West is divesting itself of gold because if you look at how much Russia, China, and India are buying, most of the time this is exceeding world production of gold now. And so that means that the difference has to be made up of the West selling. And so when all the dust finally settles from whatever happens in the next calamity that is out there, and it's getting closer and closer and closer, we're tied to the train tracks, and there's a freight train coming. And when the dust settles, they're going to be rich, and we're going to be poor.
Mike, I guess you're really well known outside all the gold and silver. You also have great work in cycles and wealth cycles, and you look at the history of money and history of markets. And, you're the guy who said a few years ago when people were saying, hey, inflation, you were saying, no. First, we have a big wave of deflation. And after this, and that would be associated with a higher dollar. And then comes the inflation and possibly hyperinflation. And correct me if I'm wrong. I think that's the way I remember in what you've said. So where are we in that cycle? I mean, if the dollar's still rising and the bond market, and yields are still getting lower and lower, that would indicate we're still in this deflation. Where are we in the cycle?
Well, I think we're getting toward the end of the deflationary period, and a lot of people don't see it as deflationary because the Federal Reserve and the rest of the world's central banks have been printing so much. They've been offsetting this deflation that has been happening in parts of the economy, but you see their inflation show up in the stock markets and such. But I really do think that we're nearing the end of that cycle. That began way back in 2008. It's getting close to being a decade old now, and that can't go on forever. And now the Federal Reserve is going to try to reduce the size of their balance sheet and raise interest rates. So they are going to pop a bubble of their own creation again In the year 2000, we had a stock market crash, and they took rates down. They created a bubble accidentally in real estate. Alan Greenspan was trying to reflate the markets, not to create a bubble in real estate. When we had the next crash, it was stocks and real estate. The next crash that's going to happen is stocks, real estate, and bonds. We've created the greatest bond bubble in world history, and the proof that it's in the bubble is the insanity of negative interest rates. I'll tell you what.
On that point for a second, because the negative interest rate bond around the world, many trillions of dollars. But actually, this is kind of shrinking at the moment, which means that the demand for bonds is not quite as robust as it has been in the last couple of years. At the same time, Yellen is saying she's going to reduce the size of the Federal Reserve's balance sheet. So that supply of bonds is coming from a couple of different places. That sounds uncontrollable once things start rolling and people decide that, you know what, I want to get out of these bonds, and there's not going to be an orderly transition out of bonds. The Fed will tell you, yes, we can raise interest rates at a moment's notice, and we can do it in an orderly fashion. Does history tell us that is going to be the case?
Yeah, I think it'll be very disorderly. You can manipulate something for a while, but as you manipulate, pressures build up. And basically all of the world's central banks have manipulated the entire global economy into this debt bubble, that when you talk about there aren't going to be enough buyers for the bonds, that there's too much supply and there won't be enough demand, that means that the sellers of the bonds, that interest rates have to go up. They've got to offer more to try and entice people to buy a bond and loan.
Interest rates going up, people equate that with a negative environment for gold prices. However, during the 70s, interest rates went up and you had a fantastic run in gold prices. Where did people get that wrong?
Well, it's when you're talking about the positive or negative real rates. So when the interest rate exceeds the inflation rate, you're actually making gains. They've manipulated the inflation statistics so much, though, that people can't really tell when they're honestly making gains or not anymore. But, regardless, what I see is a currency crisis where, the bond backs it's bonds that back the dollar and, like you said, the military. But it's future taxation that is backing the dollar and bonds. And if people aren't trusting the bonds, that means they're not trusting the currency.
Now, if we enter World War III, as some people are saying, and it certainly looks like it with all these bombing of Syria, the threats to Russia, the surrounding North Korea, something's going on. What happens to the Fed's balance sheet? Is everybody going to forget about that? Are we going to have these, the war bonds? What's going to happen in terms of the bond market? The markets is everybody going to be patriotic and start buying and everything's going to be great? And we're suddenly going to have jobs again in the factories producing missiles because, those Tomahawk missiles, you drop 60 a night, you need 60 more tomorrow.
Yeah, there is this myth that war is good for the economy, and it comes from the two wars that the U.S. wasn't involved in until the wars really got going toward the end of it. We had tremendous gold inflows in World War I, and then we actually only fought for about 6 months. When World War II started, it was 38 when Hitler started his saber rattling, and 39 when he invaded Poland. And it wasn't until the end of 41 that Pearl Harbor happened. So it was like August of 42 when we finally landed troops in Europe and actually got involved in the war. And in the meantime, our gold stocks in the United States went up 117% during those years prior to World War II. And that was because we were selling Europe stuff. Once they take all of their young men off the farms and turn them into soldiers, they have to import all of their grains. And once they turn their economies toward war, any of their consumer products have to come from places like the United States. And that's how we got this notion that is completely wrong, that war is good for an economy. It's not. It destroys economies. But if we have World War III, you better get out of the monetary system. To me, I'm betting on precious metals and cryptocurrencies, and that's it.
All right. So crypto has a place in the portfolio. Has that been a slow learning curve, a rapid learning curve? Bitcoin was introduced in 2009. Were you adherent to that immediately, or how was the process there?
I think it was about 2013 2013 or 2014, actually, when I first started really investigating this. And it's not a huge portion of my portfolio, but it's by far the most volatile. But, riding it is not easy. But I don't really pay that. I just accumulate. And
you're more about the free market element of the cryptocurrency, that it's created by the people.
Yes, I am. But if there's something like World War III and you need to search for an alternate monetary system, cryptocurrencies are the only alternate to central banking. That and then having precious metals. And you're going to see both of these go to the moon. So I don't feel that I think that precious metals is a safer bet, but I think that if this happens,